Okay, so today I want to quickly talk about Fibonacci trading strategy. All right. Now, this is a concept that most beginners will usually have issue with because when I was learning it also, it was a little confusing for me because most of the videos you are going to see, they are not going to answer the major questions that you are going to be asking. All right. So I've compiled those questions, the questions I asked when I was learning. Okay, all the questions I asked when I was learning. That's why I make this video so as to put people through. Okay, to make sure people don't go through what I went through. You understand it? Okay, so that people won't it's just to give the clarification which I lacked when I was learning. All right. Now, Fibonacci trading strategy is something that most people already know. Okay, most traders make use of it, and it could actually be of importance to you if you use it in the right way. Okay, depending on the direction of the market. Okay, that's if you use it in the right way, it can actually be of great importance, and it can actually help you enter your trades. Okay, so first, let's make it quick. What is a retracement? Okay, we know if you've been watching my video, following my videos, we know that the market moves in waves, meaning we have trends, we have an uptrend, and we also have downtrends. Okay, so the market don't go straight like this. Okay, it does not go just up. It does not just go up like this. Right now, the market moves in wave, meaning it goes up, it comes down, it goes up, it comes down. If the market was to just go like this, then all of us, everybody would have been making money. Everybody would have been making. There's no need to even learn forex trading before you come. All you just do is, okay, the market is buying, fine, I'll just buy, and you start making money. You get so if it was that easy, everybody would be making money. Okay, so the market moves in wave, meaning at the point it has to what retrace to continue going back. And this is because whenever you are buying, okay, when the market is buying, most people, most traders are going to come probably join the move here, 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 here. And soon enough, they'll be filled, meaning they don't know when the market is going to retrace. So eventually, some of them start taking their profit around this side. Okay, they start taking their profit around this side. Most people start pulling out of the market around this side. And what happens when people start pulling out of the market start going down. Okay, so whenever you close your buy trade, you're automatically sold. Okay, so that's how it is. So selling is going to push the market downward, while buying is going to push the market upward. You understand? So this is why the retracements have to occur because the market can't, or the most traders would not want to keep holding their trade. Eventually, they'll be filled and they want to take their profit. And that's what's going to cause this little price rejection before the market continues going up in the right direction due to the initial impulse that made the move. Okay, so that's how the retracement is formed. So retracement is just like a temporary price correction in trend. Okay, so we have an uptrend going up or a market that is going up. Okay, the retracements are just temporary price corrections in the trend. Okay, so same for an uptrend and it's also same for a downtrend. So the mistake people make while drawing it, okay, mistake people make while drawing Fibonacci retracement. Okay, if you follow my video, I teach you price action in a way that shows you that the market is fractal. Okay, in a way that teaches you that the market is fractal. That is how I teach you price action. Okay, so when we are trading, we put in consideration the fact that multi-time frames are working together. Okay, so when we're looking at a time frame, we look at that time frame fractally. So when we're trading in a particular time frame, we look at the time frame fractally. All right, so I want to draw Fibonacci retracement now. Most people will just come here, start drawing their Fibonacci retracement from here and extend it up from here, which is a wrong way to draw it. Okay, now most of you probably don't know what the Fibonacci retracement tool is. So all you do is tap on your screen like I've done. Okay, if you're using a phone, if you're using a PC, you're just going to see it. All you have to do is scroll up. You're going to see the icon. Okay, you're going to see the icon like an F icon. Okay, so you tap on this, clicking on it right now, and click on this plus sign. Okay, you scroll. When you scroll, you are going to see this Fibonacci retracement. You can see this is the sign I was telling you about, the F sign I was telling you about. So if you're using a PC, it's just going to be at the top left corner of your PC. You're going to see this symbol there. So all you do is click on Fibonacci retracement. Okay. And this is how you do it. Now, if the market is an uptrend, I already clicked on it. Okay. If the market is an uptrend, all I have to do is identify the swing high and the swing low of the trend. And what? If it's an uptrend, I'm going to start drawing from the swing low to the swing high. You get it? Now, if I was in a trend like this, okay, okay, and I was to trade with Fibonacci, okay, of course, if I'm to draw, this would be my swing low for this retracement, and this will be my what? Probably be my swing high. So if I was to trade this Fibonacci retracement using this, I would just simply move this my stuff. Okay, hold on. I just simply move my Fibonacci retracement to start drawing from down up. Okay, I drag it from down up. Let me show you with this. Okay, so if I was to, let me delete this and go again. Okay, so my Fibonacci retracement. Okay, if I was to draw, okay, I'm gonna show you the mistakes that people make. Okay, but if I was to draw this, okay, with the idea of Fibonacci retracement in an uptrend, I'm going to start with put my hand. Okay, let me say this is my swing low. Well, I'm just speaking figuratively or imaginatively. This is my swing low here. Okay, let's say this is my swing low. Okay, I'm just going to tap on that swing low and drag the tool up to where the market is currently. You can see this stop. Okay, and all I do is just when I get to that, I can extend it so that the line will be extended. All right. Now, all these stuffs here are confusing. I will just delete them. So, this is it. You can see it. I extended it to this stop and I extend to my right so that the line will be extended. Okay. Now, how it's traded is if we input our Fibonacci like this. Okay. This is what we're going to do. Okay. The major zones we look at for is the 23.6 zone, the 38.2 zone, the 50, and the 61. Okay, now each of these zones stands. Okay, but if we are in a strong uptrend, okay, we mostly look at the 23.6, the 38.2, and the 50% zone. If we're in a strong uptrend, we have the three major type of trend. We have the strong trend, okay, we have the healthy trend and the weak trend. The name of the trend doesn't matter. Just understand what I'm trying to say. Okay, because there are certain trends that is going to be moving like this, and when you come to the chart, you see it, and there are some that are going to be moving like this. Okay, and there are some that are going to be moving like this. Okay, so these are different type of trends that you might actually encounter. It depends on the kind of trend that you are on. Okay, but most times these zones are going to hold. Okay, and the deepest or the lowest the market could go, okay, is down to this 100% before going up. Okay, now once the market breaks this 100%, then it's violated. Your trend is violated. You can't be using this Fibonacci here right now. The trend is already changed. Now you don't use this Fibonacci 2 alone. Of course, you add it to other things. Okay, that's why it's called price action. You use other price action tactics to confirm the trade or confirm the move. Okay, now I've already told you the zones that hold. Now let me tell you about what most people do wrong. Okay, now the way I do this Fibonacci is wrong. Okay, where is my swing low here and where is my swing high in this time frame? Okay, because I tell you that the market is fractal. Of course, my swing low right now is no longer here again. Okay, as long as I can tell, this market did this, went up, came down, went up, came down, and now going up. My swing low is at this point. Do you get it? My swing low is now at this point. So these are one of the things that, or one of the mistakes that people make, and these are most of the things that you're not going to see online. Okay, you might not see it on YouTube because people are going to be teaching this old-fashioned or this wrong idea that they all have. Okay, so if I was to draw this Fibonacci tool, I would start drawing it from here. If I was drawing it, looking to buy here. So the right way I would have drawn, because this is what the market is doing. You can see it directly. Okay, so if I was to draw it, I'm just going to what? Do this like this. Clicking on it right now. I will start drawing my Fibonacci retracement tool from here. Hold on. Okay, from here. Because this is my swing low apparently, and this will be my swing high. Okay, now I can only talk about swing lows and swing highs if the market is already making a little retracement here. Okay, but for now the market is not making a retracement. Okay, it's not making a retracement, it's still going on. But if it start making a retracement, that is when I can now impute my Fibonacci tool. Okay, and wait for the market to come to any of these areas, and I can look to confirm before I take the trade. Okay, so if this market eventually happen to break all these zones and comes lower than this, then this trend is violated. Okay, according to this Fibonacci retracement, it is no longer, I shouldn't be looking to take the trade based on Fibonacci retracement again. Okay, so right now, if the market actually intend to start coming down, I can see that, look at this, you see that it's actually a healthy trend. Okay, meaning these zones, this place here could actually be respected, then the market could go up. All right, so if you look at it now, all I do, I just have to extend this. Okay, that's if the market was retracing, and I'll wait for the zones to come. Okay, all right, because this is what I'm seeing. So this was my swing low, and this would be my swing high. So if I was to draw it, if the market was within this region, okay, I would simply bring my Fibonacci, draw my Fibonacci between this point to this point. Okay, so if we're to look at that, let's see the zone that holds there. Let's delete this. So between this point to this point, you see, then I have to extend. Okay, and what do you see? Okay, the 50% zone held perfectly. All right. So this is how you draw. This is how you draw Fibonacci retracement tool. Okay. So now it's not only that's what I'm saying. The market is fractal, and I wish this video would be long enough, or I wish I could make this video long enough to explain the fractality of the market to this. Okay. Now this is what we are drawing in a daily time frame. Okay. If we went to a 4-hour time frame or a smaller time frame, we are probably going to see other trends within this trend. Okay. So if I was to go down. Okay, now notice that I already have my zones from the day time frame. Okay, I already have my zones, and I can actually use any tool to identify them. Now, if I went to another time frame, like the 4-hour time frame, let's go back to that region. Okay, that region, and we will actually to trade this. Okay, let me use here. Okay, we were to trade this. What I can see. Okay, what I can see here is this. I see a retracement. Okay, so if I was drawing Fibonacci in the 4-hour time frame, this is what I would have probably done. I'd have started drawing from this point up to this point, and apparently you see that the market actually invalidated it before it started attempting to go up again. Okay, now if I miss that trade, no problem. The market was still in an uptrend, and I said, okay, fine. When the market came here, it did this. I would have still drawn my Fibonacci to between this point to this point. Okay, and if I did, this is what I'm going to get. Okay, so let me say I draw this between this point to the up point. Okay, hope it's not confusing for you. This is what I'm going to get. So that the market actually retrace down to the, hold on, let me go to the daily time frame to delete the bigger one. Okay, so going back to the 4-hour time frame. Okay, so that the market here actually respected the 38.2 zone. You can see it. Okay, the market here respected the 38.2 zone here before it started going up. So when we are drawing this or trading this Fibonacci retracement, it's actually dependent on the time frame you are working on. Okay, so I can't be trading in 4-hour time frame and I'll be looking at Fibonacci retracement of 5 minutes time frame. You understand it? So the market is fractal, and I've explained this in my previous videos, talking about fractality of the market, and I'm probably going to drop the link in the description so you can actually check it out right now. Okay, the market is fractal. That's what you have to put in mind when you are using these tools. Okay, or when you are making technical analysis. All right. So, and if you look again, what do I see? I see something like this. Okay. So if I was to draw a Fibonacci retracement between this point to this point, I will start from here towards the highest swing I saw here. Okay, then if the market was retracing, I will probably be looking for any of these zones to hold. Okay, so you guys, now this is the major thing that I was battling with when I was learning, because I didn't know, should I draw my Fibonacci retracement from daily time frame and be waiting in 15 minutes time frame for it to come, or I should draw from 30. I didn't actually know the time frame I should draw my Fibonacci from. Okay, so I hope this answers that, and I hope this makes it clear for any trader out there that might be having the same issue. Okay, so it's dependent on the time frame that you are working on. So let's just look at any other chart. Okay, look at any other chart. Okay, what do we see here now? This is, let me delete this. Okay, this is Euro USD. Okay, neglect this. Euro USD, look at this. Now, if I was to draw a Fibonacci to here, first of all, what do I see? Okay, I see this. Okay, this and this. Now, we're waiting for the market to probably do. Yeah, the market is already retracing. Now, this is a good time we can use Fibonacci retracement. Now, what can I do? I'll just simply go to my tool because I'm trading in the 4-hour time frame. Okay, I'm trading the 4-hour time frame. I know that I'm trading the 4-hour time frame. So I pick up my tool. Okay, and if it's an uptrend, we're drawing from down up. Okay, if it's an uptrend, we're drawing from down up. Okay, now if it's a downtrend, we're drawing from up down. Do you get it? Up, down. According to what I've discovered, according to what we saw here, this is our swing. So this is our upswing and this is our downswing. So we're drawing from up, down. Do you get it? All right, now. So I'm just going to tap on this. You can see it. Now extend it down. Okay, now when I get to this down zone, I'm just going to what? Expand sheet. Okay, now I see that we are in the 50% Fibonacci zone. Okay, and it's very likely that this market is going to respect either this 50% or the 61.8. Okay, this 50% or the 61.8. Okay, so you can see it. So if I'm trading this market probably this week, I'm probably going to be looking at these zones. I got the Fibonacci retracement strategy. Okay, and it's also coincide with that is the thing. This stuff is not the forex market. Okay, follow a certain pattern. Okay, it has a certain behavior, and there are different strategies which will help you get into the behavior. Now, if we're looking at the smart concept, we'll probably be looking at this either this zone, okay, the SMC traders are probably looking at this zone or somewhere here. Okay, so the market could actually hit this zone and come down, okay, or grab liquidity, then hit this zone or come down. Do you understand it? So the market actually is doing the same thing and the same thing and the same thing. Once you understand the behavior of the market, everything gets easier. Using Fibonacci tool gets easier. Using SMC gets easier. Using trend lines, what it gets easier. Once you understand the fractality of the market and the way the market behave. Okay, so this video is getting so long, I want to cut it out now. So, but this is how you trade using the Fibonacci. Now, how do you enter your trade? Okay, how you enter your trade? All you have to do is just wait for it. I can't just enter blindly because the market is at the 50 zone. No. Or the market is at 61.8 zone. No. Okay, I can't just enter blindly like that. Okay, I have to look out for a candlestick pattern. Okay, like what I've been saying. So, we could look out for a bearish engulfing here. So, in the downtrend, a bearish engulfing at this 50 zone. Okay, or a harami, sorry, a bearish harami. Okay, and evening star, that is the opposite of shooting star, opposite of the hammer. Okay, so that is a bearish engulfing, an evening star, okay, or a shooting star, just opposite of the inverse of a hammer. Okay, the inverse of a hammer. Okay, so we can look for any of that within this zone, and it could be our entry confirmation that this market now wants to start going down. Now, what we have to do is enter our trade and put our stop loss above the next, above the next zone that we see. Okay, because there's evidence that the market could still come and play around there before continuing downward. So you get, so in a nutshell, this is how you trade using Fibonacci retracement. I hope this makes it easier for you, and I hope you understand it now. So if you have any question, drop in the comment section and you'll be gotten back to in time. Okay, just understand the movement of the market. Okay, just be able to identify the swingers and the swing low, then it gets easier for you. Okay, and remember, if we are in an uptrend, we draw from our swing low up. Okay, and if we're in a downtrend, we draw from the swing low down. All right, and don't make the mistake that most people make. Okay, you have to look at the time frame you are trading on. Okay, so I can't come here and say this is my swing low and draw instead my Fibonacci from here to the highest point. No. Okay, because we understand the market moves in waves. So we are taking advantage of the current wave of the market. All right. Okay, now just to show you for the last time, let's go to a 5 minutes time frame. Okay, a 5 minutes time frame. Okay, now what do we see in a 5 minutes time frame? Which kind of trend are we in a 5 minutes time frame? Apparently, in 5 minutes time frame now, we are in an uptrend. Okay, in the 5 minutes time frame, I already spoke to you about confluence of trend and how retracement in trend could be a different trend in a smaller time frame. I already spoke about that. The reason why we're in an uptrend right now is because, we're undergoing a retracement in a downtrend in the 4-hour time frame. Remember, we're coming from the 4-hour time frame. Okay, so that retracement is going to be an entirely new trend in this smaller time frame. Okay, so now with the knowledge of what we have seen in the 4-hour time frame, okay, we shouldn't be looking to buy yet, because know that it is close to a zone where we expect the market to retrace. Okay, you understand it? It is close to a zone where we expect the market to retrace. It was close to the um the 61, okay, the 61.8 and the 50% Fibonacci level. Okay, so we can't be looking to take counter trades now. Okay, now going back to the 5 minutes time frame. Okay, we can't be looking to take a buy trade now. All right, so we could wait for the market to actually continue in the down direction, even in the 5 minutes time, meaning wait for the market to break this structure, give us a confirmation that it have actually broken. That means this, and continue going that. Then we can now draw our retracement and draw our retracement in a set direction with this swing high and this swing low. Okay, then we can now sell with the trend. Okay, so this is for today's video, guys. Don't forget to like and subscribe so you stay updated whenever I drop a new video. All right, and if you have any question, you can drop in the comment section and you'll be gotten back to in time. All right, stay cool, guys. Peace.